Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at SPY on the daily, weekly, shorter term time frame. So we had a double top at the all-time high today, 229.71. We got within 5 cents and then pulled back. So what I'm seeing occurring here is a very clear higher low pattern and a horizontal resistance at the all-time high. We cannot break that all-time high. We're going to continue seeing a tightening range form. We have a gap down at 228.10. If we see further consolidation, that is where we're going to be looking first. And the middle Bollinger Band daily support will be just under 228 in the coming days. So we did close fairly close to the low of the day, showing a bit of weakness, but we also closed in the green compared to yesterday. And we have higher lows the past few days as well. So it's a very clear tightening range. I'm still all about the middle Bollinger Band. That was our guide last week and it worked out well. That's our guide this week and we still have a bunch of wiggle room before we even test that level. And as we know, if we get a new all-time high, bulls will see some nice follow through and we are right on the verge. The weekly chart did break the high of last week by 11 cents. So the bulls do have some momentum. The only problem is we just didn't get that follow through with a new all-time high. So here on the 5-minute time frame, we came very close within the first 20 minutes of trading, tightening range, and then a dump, and then a little bounce attempt, and then another dump. So once that first dump occurred and we hit a new low of the day, it was very unlikely that we were going to hit a new all-time high following that kind of price action. And we did see a little bit of a bounce at the end of the day, but look at the last hour. We're used to the bulls being very strong in the last hour. That was not the case here on SPY. So we are looking at some potential weakness as we head into tomorrow. So if we do break the low of today, 228.72, we will be looking down at 228.10 as the gap to fill on the daily time frame. In terms of the hourly, we do still have some key hourly moving average supports down in the low 228s as well. Those will be around the gap fill on the daily. But we were struggling at the middle Bollinger Band. We lost that level, the 20-period moving average, and we rejected from it all attempts in the candlesticks following that loss of support. So 20-period resistance, it actually rejected the price a bit back on yesterday as well, Monday. And we've got plenty of support to be watching on both the daily and hourly time frame. And the question is going to be, do we break the low of today and head to 210, make that 228.10, or do we get a new all-time high tomorrow? And we are currently about 0.3% away from that all-time high, so it would not take much. I'm watching the correlation with XLF. It's very important. And XLF gave us a bear heads up early today. The correlation between XLF and SPY has been extremely strong since the election. Look at XLF. Bear break occurred pretty much at 10:15 a.m. and SPY had not had that bear break yet. The clear bear break did not occur until after 11 a.m. So keep an eye on XLF. I'm watching that correlation constantly. I do not believe that the S&P 500 is going to be able to get a new all-time high unless we see some strength in the XLF financial sector, which has a triple top. 2380, 79, and 78 have been our three tops there. So it makes a lot of sense that SPY is now forming tops as well. I appreciate you watching. We'll check back in tomorrow. Have a great night.